had the increase in uncertainty, which will burden the CNY, and you have seen dollar CNY heading towards the multi-year highs. I think as long as we get, at least from the U.S., some just micro measures, and we do not see a further escalations either in tariffs or, cancellation of the phase one deal or broader sanctions, I think the conditions are still very good actually for the CNY to strengthen throughout the coming next 3 to 6 months, because there are some very generic factors that really speak for the CNY. We have a better growth trajectory for China versus the U.S. The external balance is likely to improve as there's going to be less travel out of China, and we see a lot of value in Chinese assets, particularly on the equity side, but also China offering some yield. So as long as we don't see tension really going overboard here, I think the dollar CNY can top out, and actually point of gravity is lower. So we're looking at somewhere 6.8 towards the end of this year.
Okay, that's interesting. And what about the Hong Kong dollar? That was a story all of last week, how the Fed was holding up. And in fact, for the Hong Kong dollar, we've seen the currency be one of the best performing currencies in this part of the world, at the stronger side of that range, standing at about 7.75. Or do you think that momentum, that strength would continue given what we're seeing with the currency markets and the environment as far as the underlying economic conditions go in the region?
Well, I think you might have a little bit of a lift from the lower bound of U.S. dollar Hong Kong, but overall the currency board is here to stay. I think what could happen, obviously, as uncertainty is here, that the premium we have seen on the HIBOR side stays elevated or temporarily spikes, I don't know, to 150 basis points, something around that, to ensure that basically the currency board stays intact. So for us, not much of a change on the Hong Kong dollar side. Spreads are elevated, likely to stay elevated given the tensions. But from that side, for us, not a major trade at the moment to look into. I think for us more important is that basically as growth normalizes, I think the dollar in general is likely to be under pressure. And I think the GFC template that we have seen in back then in 2009 is likely to apply. Dollar strengthened into the crisis, but then gave up all its gains from the first quarter onwards. And I think the same will happen here again as we go in the second half of 2020.